financial services group Vunani Limited announced its interim results today. The group reported a reduction in its headline loss per share of 0.5 cents, and this against a loss of 2.5 cents in the comparative period. We now unpack the numbers with the company's MD Butana Khoza, who's standing by at the JSE. Thanks so much, Butana, for joining us this morning. Well, we've seen Vunani release these results for the 6 months, and as I say, a move or some progress being made in terms of eating into that loss position. Still, though, it's a company that's sitting in a very difficult position that needs to be further whittled away at, right?
No, definitely. I think that we've made quite a lot of headway. I think the big theme being to reduce the amount of debt that's been sitting on the balance sheet. I think those restructuring initiatives have really culminated in what we saw quite recently, earlier on this month, the listing of our investment property portfolio. Basically, I think the key theme here is that in the year under review, we've reduced debt by just under 800 million rand, which I think will lighten the burden, the finance cost burden on the income statement and debt on the balance sheet quite significantly. I think it's a significant opportunity for the operating businesses to start pushing through. And hopefully, I think going forward, the situation should be relatively easier to manage.
Let's take a look at some of the strides the company has made in this period, because what had a negative impact on earnings this time that will certainly add to muscle down the line is 2 acquisitions, and we've seen Kagiso Securities being integrated into the business and also the Vunani Fund Managers acquisition. So run us through that and how you see that contributing to earnings moving down the line.
I think starting with the Kagiso Securities acquisition, I think for all intents and purposes, that acquisition has been bedded down. What it does is it gives us tremendous critical mass on the research side of the business. What we've done is we've rationalized the infrastructure to basically operate off a single platform. So effectively what the acquisition has been is a scaling up of the business, bringing on more people in order to up our value proposition to the market. So we're quite comfortable that that business has the right level of mass to be able to make an impact on the positive impact on results going forward. We've already seen revenues in that business substantially higher. I think what will help that business quite significantly is that there has been natural attrition in the first 6 months. So the staff sizes have come down. I think we're at a nice level now, and we should actually see, I think, the numbers start to make a positive contribution going forward. I think the one disappointment has been that we did incur some closing down or closure costs just in the rationalization exercise, but those were once off, and I think we've pretty much dealt with all that needs to be dealt with as far as the Kagiso transaction is concerned. With regard to the asset management business, that is, I think, has been quite a smooth 2-phase process. We initially acquired 51% of the business and then very recently took out the business 100%. I think the cost base is optimal, and our view is that as we add assets under management to that business, it will all trickle through to the bottom line. So we're quite comfortable that we now have an asset management business that we control 100%, and therefore all that we make there is basically available for Vunani to use as it deems fit. Hopefully this will be a big business or contributor to dividend payments going forward. So I think we're quite satisfied with the acquisitions that we've made in respect of those particular investments.
Where you've been muscling up on those ends, we've also seen some letting go or disposing of investments, and that particularly in the investments business, where you've let go of investments not meeting designated criteria, and one of them having been, over this period, Peregrine Holdings. What are some of the criteria you're looking at and the factors influencing the kind of rebalancing we are seeing within the organization, Butana?
I think the key criteria is really that where we've actually geared up on an investment, then the cash flows emanating from that particular investment, especially dividends, should be sufficient to actually service the finance costs. The second element is that we've got to see pretty reasonable, if that isn't the case, reasonable prospects of capital growth that will enable us to alleviate that debt going forward. So I don't necessarily believe that Peregrine per se was one of those transactions. It just happened to be a transaction in which we had been involved in for a considerable amount of time. And I think in line with the acquisition of the fund management business, of which the significant equity in that business were acquired from Peregrine, I think there was just a general view that we should try and move to a situation where we focus on operations and we use and try and get into control structures where we're involved in financial services.
Butana, very briefly, I mean, de-gearing of the balance sheet, one factor, of course, together with the group's refocus on core business, the company highlighting, and you've reiterated this morning, will see Vunani sustainability and return to profit in the future. Just how far off into the future are we looking at before you return to profitability?
We're certainly taking a view that we'd like it to be more short-term rather than medium-term. We are involved in quite interesting transactions at the moment, which we hope should make a significant contribution in the current financial year. Suffice to say, it would be nice if we could show a small profit in the current financial year, but certainly we're looking at the same time next year as a definite target for the market to actually recognize that some of these interventions have had a positive outcome.
Well, Butana, let's leave it there. Thanks so much for your time this morning. Of course, Butana Khoza is MD of Vunani and joined us live from the JSE.